Good afternoon, everyone. It's a Monday. I'm not usually live on a Monday, Colleen, but I am here with you today because
I
I
know.
think Leslie normally goes live with you once in a while, but I think it was my turn today. So, how are you?
Yeah, I am well. I am well. I am. It is weird to do this on a Monday, but we'll get through it, right?
We will get through it. Okay, so today is, none of the interior designers really like to talk about their money and their financial reports. They like to bury their head in the sand. I like to do that a little bit myself as well. However, it's important for them to do certain things quarterly, right?
hmm
So, you at C2 Accounting help your clients make sure they don't lose track of these things, right? But why don't you tell everyone what they should be doing every quarter?
Yeah. So, like you said, a lot of people don't want to talk about money, but we're trying to change that as C2 accounting. So we're trying to get our clients comfortable, including you, Nancy, with not only looking at their numbers, but talking about their numbers. So the truth
Yes.
is, the things you need to be doing quarterly. Um, well, let's go back for a second. What is a quarterly check-in, and why does it even matter, right? They help to prevent year-end surprises. No one wants to be shocked by a tax bill or realize that your books are a mess and now you're stressed. The stress of trying to get it all done at the last second. It gives you
Yes.
time to course correct. So the biggest thing when it comes to like your finances and taxes is if you wait until next year to look at 2025, it's done. There's nothing you can really do, right? There's whatever happened. But if you're looking at things on an ongoing basis, you have time to change directions. Maybe it means that you're making so much money that it's time to turn yourself into an S corp, or it's time to increase how much you're paying yourself, or maybe you're making less than you thought, and maybe you need to cut back on some planned expenses, but you won't know that unless you're kind of checking in with us with your numbers.
Okay.
The other benefit of a check-in is that it makes tax season a little less painless, a little less painful. Sorry, it makes it painless, less painful, because you're
Hmm.
not surprised. You know how much money you've made. You have an idea as to how much of taxes you'll pay, and so the numbers won't surprise you.
Yes.
Um, yeah. So and that way you kind of have things budgeted for it. That's why it
So do
matters.
you mean, okay, so do you mean they should be, if they're a one person show, they don't have a
hmm
bookkeeper, they don't have an accountant, except for tax season,
Right.
which reports should they be looking at?
Okay. So there are three really good reports that you look at every quarter. First, everyone's heard of it, your profit and loss statement. Some people call it an income statement. And
Hmm.
the profit and loss is going to tell you how much money you've made, how much money you spent, and at the end bottom line, what your net income or your net loss is. And I think you and I did a video before where we actually walked through showing those reports. We're not going to do that today, so they
Right.
can go back and watch one of the older videos. But
Yes.
you want to look for things like overspending, underbilling. I have had a lot of people that happen, not just in interior design space, but in other industries as well. If you're a single person and you're trying to keep up with billing, especially if you're billing on an hourly basis, it can get overwhelming. And
Yes.
that will help you realize where you're kind of falling behind. I also like to look at trends by either by month or by quarter. So you can kind
Okay.
of see, if I paid $500 a month for some sort of service, and then all of a sudden there's a spike for $3,000, well, that's something maybe you should be aware of. And maybe you didn't realize that maybe once a year you get billed extra. You know what I mean? Those are kind of things that people kind of forget about until it
Yes.
falls on them. And by reviewing those, the trends, it helps you to stay on top of that.
Okay.
Does
Okay.
that, yeah.
Yeah, it makes sense because if like it happens to me, I have some bills that I pay once a year because I got a discount years
Mm-hmm.
ago and I never remember until I start looking every quarter what I spend this quarter. And then you start to go, wait, where's that bill from so and so? And then you
Mm-hmm.
start realizing when it's going to come in and then you can manage your money better too.
And if you were planning on canceling, I've done, and I'm going to confess, I have signed up for something for a year because it was cheaper, forgot about it, and then all of a sudden I'm charged, and it's like, oh, had I looked the month of the quarter before, then maybe I would have caught that. So no one's perfect, and I'm not saying that you're going to get it right every time, but it helps.
Yes.
Um,
Okay.
One of the other things I think by looking at those trends, you can take a look at the cost of goods sold compared to your income. And then you can also understand if maybe I'm underbilling and my margins aren't high enough. If you notice your cost of goods are creeping up, in relation to your income, then it's really time to take a look and see like what are your margins, how are you charging people, and make sure that the pricing makes sense.
Yes, I've got people on my calendar every day talking about pricing of product and how to make the right margin on furnishings and other things that you buy for a job. And it's not easy. So they really have to be on top of it. So this quarterly review and looking for trends will help them not end up in an emergency situation.
And we just talked about the profit and loss for the company. Now, if you want to get even more granular, you and I know that you can run profit and loss by job, and that you should be doing way and quarterly, right? Because your projects are going to be more frequently. And that's really going to help you stay on top of understanding how much money are you really making for a project.
Okay.
All right. So we talked about the profit and loss statement. The next one is the balance sheet. And just to give a recap, a balance sheet, that report is one report that I don't think a lot of people look at, but it actually has a lot of information. So it's going to list up top your assets, and assets are things that you own, like your cash, your any kind of deposit accounts you have, accounts receivable, because that money is owed to you, any loans that you've given out to anyone like that, any prepayments, like if you put a security deposit on your space, technically that's still your money, that's an asset until you move out and you get that back. So those are your assets. And then it looks at your liabilities, the things that you owe. That will be your credit cards, your lines of credits, business loans, sales taxes, and making sure that you're keeping an eye on those types of things, because liabilities, credit, debt can really tank a business if you're not keeping an eye on it. So understanding the relationship, because when you're borrowing money, especially, and you're making payments on that, let's say you borrowed it last year in 2024, and now in 2025, you have $1,000 a month payment back to a bank for a loan. Well, that expense will not show in your profit and loss statement, but it's still cash just walking out the door. So you're sitting here going, my P&L says I've made $100,000 this year, but I don't feel it. But I'm like, well, 12,000 just will run out the door because you were paying back that loan. So do you know what I mean? It kind of helps.
So it shows up in this other place, and it is something that people don't really understand. Your bank account does not match your accounting reports.
No,
it doesn't, and it's not meant to.
Right, exactly. And just because you made $100,000 in 2025 does not mean there's going to be $100,000 sitting in your account. Because the other part on top of your assets and your liabilities, you also have your equity, what the business is worth, right? What you own in it. And so a big part of that are your owner's draws. And that's a big source of cash that people don't always think about. Because most people who are taking owner's draws, they're not just writing a check once or twice a month, right, for $1,000 or $5,000. They're like here swiping cards, and they're doing all these little things, and those little things add up really quickly.
They do.
And you're wondering, where did your cash go? And when you go look at your owner's draws, you'll realize how much you've actually taken out of the business.
I've said that to people. How much do you pay yourself? Oh, I don't pay myself anything. How much do you run through the business? They're like, oh, I do some of that. I'm like, okay, so sit down one night when you're watching TV with 12 months of banking statements, highlight everything that was personal, because that discretionary income that you went through your business and took is pre-tax dollars, and you actually made more than you think last year.
Exactly.
Right. So
right. And so if you are not keeping accurate records, and let's say you have a tax preparer that just says, give me your reports, and they're not checking what you've given them.
Yes.
And you've allocated all those personal expenses as some sort of like expense in your P&L. Now you've underreported your income to the IRS. Now, if you ever get audited, we all know what happens then. So making sure you have really good records, understanding not only how to have good records, but why you should have good records is important.
Yeah, I knew one person who got audited, and it really sent their life upside down for 2 years.
It could be a long time.
Yeah.
And not just IRS audits. Have you ever had someone go through a sales tax audit?
That was the audit I was thinking of, actually. I almost said, well, it was actually a sales tax audit, and it was a nightmare.
Those are horrible. Sales tax audits can be worse than an IRS audit. It is miserable. So making sure you're staying on top of sales taxes, it's so important. Understand it's not your money. It's not. You're just being a government agent at that point. So we talked about the profit and loss statement. We
Okay.
talked about the balance sheet.
Balance sheet.
And then the other one you really want to keep an eye on is your accounts receivable. Who owes you money? Now, in theory, if they're following Nancy's process,
I was just going to say that nobody should owe you money if you're following money.
accounts receivable. But we all know stuff happens, right? Not everyone's following Nancy's process. Some people have, for whatever reason, extend credit. But making sure that you are taking a look at that. And here's why this really matters. If you are paying sales taxes, okay, we just talked about sales tax audit. So some states make you pay your sales taxes on a cash basis, which means you only remit sales taxes when you get paid. Other states make you pay sales taxes on an accrual basis, which means when you invoice and your invoices in your system, you pay the sales tax whether you've gotten paid or not. And so you're actually then fronting cash for the invoice that you may or may not have gotten paid. If you're not keeping up with your books, maybe there's an invoice that you're never going to collect for whatever reason. The client went bankrupt and you never reverse that invoice out of your books and actually create a credit to reduce your tax liability so you can recoup those sales taxes that you paid. It all makes a difference. That could be $10,000 right there
Sure.
that you actually do back.
Interesting. Interesting. And when you're due sales tax back, you just net it against your next submission.
Right. So this is how we do it in our C2 accounting. We'd never delete invoices. We don't void invoices. We always do a credit memo, right? In QuickBooks. Now, it doesn't matter what you do in another system because a lot of times those credit memos don't sync over, especially some of the software. So in QuickBooks, we do a credit memo, and that actually will then be reflected in the next sales tax report. So it'll be a negative, it'll be a reduction in net income. It's also a reduction in sales taxes due.
Nice. Okay. So
and you have a paper trail in case you get audited.
Right. So you don't delete, you just do it a different way and you know how to do it.
Oh, yes. It definitely makes a huge difference.
I'm sure. Yeah, I'm sure. Okay. What else? 3 reports to look at the end of every quarter. Anything else?
We talked about the 3 reports. So again, profit and loss, balance sheet, accounts receivable. Now take those reports and turn them into action. Okay, so you look at your P&L and you realize revenue is low. Okay, well, we talk about how can we refine pricing? Do we need to boost marketing? Do we need to focus on more profitable services? We all know that a lot of interior designers have that August slump.
Yes.
So understanding like what can you do during the August slump to kind of compensate for the lull that you know is probably going to happen. Right. If your expenses are high, after you look at the P&L, maybe you need to cut some leaks, figure out what expenses do I have that I don't need. Manage your spend like that. A lot of times the easiest way to profitability is just cutting your spending because, you know, we like to spend. And so sometimes we spend more than we probably need because we all get shiny object syndrome. Guilty. I love software.
Oh, totally good. And you know, when I'm flush, I'm like, this is fun. And then when you're not flush, you're like, oh, I want to have some fun and I can't do it, right? Like
exactly. You're starting to look and see, okay, what can I cut? Like what do I really need to spend money on? Yes. And then if profits are strong, that's what you want to set aside for your taxes. You want to reinvest in growth. You want to build savings. You want to put cash in savings so that next August, when you have the summer slump, you're not freaking out because you have money to carry you through and you can actually enjoy the summer with your kids. You could go do something fun and not worry about, oh my goodness, sales are down this month. You can focus on marketing.
You're right. And I'm hearing you talk and I'm like in my head, I'm going, the number one thing any designer can do for themselves is understand a little bit more about their numbers because most people come to me, they have no idea exactly how much they made, even where to find the numbers sometimes. A lot of people are still in spreadsheets, not a good idea to, you know, getting on QuickBooks online opens up the world for you to get your accounting done and your bookkeeping done and gives you the ability to really see your numbers well on a regular basis rather than these old school spreadsheets that some people are still using.
Yes. The reason spreadsheets are not effective after a certain point is they're not dynamic. You really can't run reports. You can't drill down. You can't understand anything behind it because it's just a flat number. Here's one other thing I just thought about. I noticed when people are how turning those reports into action. I've seen, and I'm not sure what your take is on this, but when interior designers are paying the contractors for their
Mhm,
clients.
mhm.
And I've seen the margins on that be either really low or they're like, oh, I don't charge a margin. But I'm like, okay, but you're managing that process. And if your client's paying you by credit card, so you're eating the credit card fee, but you're paying the vendor their full amount. So you're almost losing money. So what do you teach people in that case? You tell them not to do that, to go
Let
ahead
the
and have
client pay the
them.
contractor directly and don't run it through your business.
Yeah. Yeah. And
Because
I've seen
it's
people
going to
do both
skew
ways.
all your numbers, and it, in my eyes, feels like it adds liability to the designer for the contractor's work, even though we know that a
Mm,
client can sue a designer and a contractor simultaneously, whether the money went through the interior designer's business or not. I feel like
mhm,
it gives that extra layer of the client hired the contractor directly. Their contract is with the contractor. So should there be a breach of contract, the client and the contractor are dealing with it, and hopefully they don't bring in the interior designer. But if that money came through your business, you are definitely being brought in because you are the person who are actually sold the services.
yeah, yeah. No, I know a lot of people do project management, and that's another
Project
conversation.
management
But
different. You get a fee for project management, but you don't necessarily make the money they're paying to the third party through your business if it
right,
doesn't make
right.
sense.
It does make sense. But if they are, and that I've seen that eat up more cost than people realize
Then they
because
have to add a margin, and their
yeah,
project management fee should be high enough to cover like
exactly.
you're saying, the taxes, the money management of that
Yeah.
large dollar amount. There's a lot
Credit
of
card
risk there.
fees if they're paying by credit card because then you're eating that yourself. So yeah, the contractor gets over, but you're kind of left holding the bag. So
Absolutely.
right.
And it's more transactions for them to pay their bookkeeper, their accountant, their everything. I mean, money management, right? It's
Right.
more
Yep. Now
money,
you have
more
to send the
management.
1099 at the end of the year. So yeah, all it's a lot. It's a lot, right?
It's
Yeah.
a
So
lot.
we talked about the three reports. We've talked about turning them into action, and then finally we want to talk about staying on track for your taxes and your goals. So quarterly tax reviews, I can't say they eliminate, but I think they help to reduce underpayment shock, meaning you kind of have an idea as to how much you should be paying. And if you have a good tax accountant, which you should also be talking to them and they should be looking at your numbers saying, yep, this is you're on track. What I told you to pay quarterly is what you should be paying. Or no, you're making way more than we anticipated last year. So you need to increase how much you're paying for your estimated taxes, or vice versa. You're making a lot less this year, so I told you to pay $25,000 every quarter, but maybe you really only need to pay 10 because you're not making as much.
Right.
If you're not having these conversations, you're just driving blind, and so you
Yes,
just don't know where to go.
absolutely. Okay.
The other benefit is that you're in. It lets you see if you're going to hit your revenue targets, and then hopefully everyone has goals. We're all setting goals. We get excited in the year. I'm going to make 500,000 next year. I'm going to do 1 million next year. How do you know how close you are to hitting that goal if you're not tracking it? And
Yes.
just running a simple profit and loss statement will help you see how close you are. And I would say, even more importantly than having sales goals, and you can tell me your thoughts on this, is having profit goals, because you can have $1 million in sales and still lose money on
Yes.
profits. So,
Yes. I kind of drive it, I simplify it because interior designers are creative. I'm creative too, in a way, right? With
mhm,
marketing. So I feel like it gets very, very confusing. So to me, it's like, how much do you want to bring? What do you want to take out of your business into
mm,
your personal life yearly? That's
that
how I
makes sense.
say it, right?
Yeah.
So if you want to make 100,000, how much do you need to bring in at the top line? How many types of jobs do you need? Do you have different service models? And we start backing into it. But
That's
it's
it.
so important, like you said, to review it quarterly. Because, like, for example, I just got off with somebody on a consult, and they're like, okay, I need 5 jobs a year, 5 full service jobs a year, and they need to be this dollar amount. I'm like,
Mhm,
okay. And if they're not, or if you bring in a smaller job or 2 smaller
right.
jobs, then so quarterly you can be looking at what you attempted to do at the beginning of the year, and is it working the way you thought, or do you have to modify? So I think that's a great idea to check the direction of your goals and see if it's working.
Exactly. You know what? Let's put this in interior designer terms. I Interior designers tend to have punch lists, right? Like they're looking at like all the little things. You don't want to wait until the install day when
Yes.
things are done to go, oh, we forgot to paint this little crack. We didn't fill that.
Right.
You wouldn't want to do that, right? So it's the
Right.
same thing. Think of this as like a punch list for your finances. So that at the end of the year, your install day is not a big surprise.
Yeah, you don't want to come to tax day and not have done any bank reconciliations, not ever looked at your numbers, not talked to your bookkeeper or accountant, or not reconciled and made sure you're categorized properly. There's a ton of things to make sure so that you're not in a rush, and then have to file for an extension, which is then a pain in the ass too. And
Well, I
it's
would
just
say, even so, you mentioned they don't want to wait to tax day. You don't want to wait till December 31st.
right.
Because let me tell you, bookkeepers and accountants are busy in January, February. Like we're busy at the beginning of the year. So if you're waiting until January to engage with one of us, one, it's not going to be as fast as you think it's going to be. And
Yeah.
two, it's probably going to cost more than you're expecting. So,
Well, this is what, okay. So I'm going to put this in interior design terms. It would be like someone calling you, I'm going to say October 1st, and saying they want their dining room completely redone and ready for Thanksgiving. And you go, that's not going to happen, right? So it's the same thing. Don't wait till the last minute to get your bookkeeping in order. Please call C2 Accounting. Get Colleen to look at your books, which is what you do, right? You do a quick review
Mhm.
and then determine if there's more work to be done, and you'll do an estimate for someone and let them know what you think needs to be done and how much it'll cost and what the time frame is. So don't wait.
No, don't wait. And I know a lot of this sounds overwhelming, but remember, they don't have to do it alone. So at C2 Accounting, I know we don't just keep your books. We try to translate them into like plain English, make it easy to understand. So
Yes.
just find someone that you can partner with, that you're comfortable with, that can help you so that this part of your business isn't stressing you out.
Absolutely. Okay. Well, happy Monday. We made
Happy
it.
Monday. Good.
We made it through our live. So, all right, everyone, go have a great rest of your day. Please get on C2 Accounting's website, sign up for a consultation if you currently do not have a bookkeeper at all. Or if you have a bookkeeper that you don't feel you can talk to, or you feel embarrassed to ask questions, because Colleen does not let you be embarrassed to ask any questions. It's never a dumb question. And I love the fact that you and your staff put everything in English so that we can understand it. It's really
Yeah.
important.
And even if they're not having issues with their bookkeeper, but they just want a second set of eyes, maybe the bookkeeper isn't specialized in interior design. We do that too. We can just take a look at it and give them peace of mind that this bookkeeper is doing things the right way for them.
Perfect. 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 All right,
All right.
everyone. Go have a great day. And thanks, Colleen. And we'll see you next month.
See you next time.
Okay. Bye, everyone.